Hello, students. My name is Shesi George, your professional accounting teacher. Before you continue with this video, please subscribe to my YouTube channel, The Georgian Theory Concepts. Thank you. All right, let's get started. In this video, we are going to consider the concept of analysis of income. Analysis of income. Okay. Now, as we all know that every business aim and objective is to achieve income. Okay. Therefore, their statement is always divided into two. Okay. The statement is always divided into two. One is showing, when you talk of income, is divided into two. The statement will show gross income and net income. The statement will show the gross income and the other part will show the net income. Okay. Now, what is gross income? That is the excess of the sales over the costs of goods sold. That is gross income. We give you the gross income. The net income is nothing but the gross income over the expenses. That's the excess of the gross income over the expenses. All right. Okay. Now, any factor, if the gross income is affected, automatically the net income will be affected. All right, the net income will be affected. Based on that premise, we will concentrate on the gross income. We'll concentrate on the gross income. So let's do the analysis of the gross income. Okay, that is, we are trying to look at the change in gross income. And this change talks about increase or decrease in gross income. What brings about increase or decrease in gross income? There are two factors that can affect this. Number one, we have the sales. If there is a change in sales will affect the gross income. Change in sales. And don't forget, when I say change, under this premise, we talk of increase or decrease in sales. Every other thing remain constant. Or change in cost of goods sold. All right? Change in cost of goods sold. Let's go further. The sales is the function of, number one, the price, that's the selling price. Number two, the quantity. And number three, we have the price and the quantity. The price and the quantity, that's the combination of these two. Okay? If there is a change in the selling price, it will affect the sales. It will automatically affect the gross income. If there is a change in the quantity, and this quantity can also be called the volume. If there is a change in volume of sales, it will affect the sales. It will have an impact on the gross income. Okay, don't forget that sales is price multiplied by quantity. Okay. In the same vein, three things affect this, but this time around, talk about the cost price. But sales talk about the selling price, but this talk about the cost price. So if there is a change in the cost price, it will affect the cost of goods sold. Thereby, it will affect the gross income. If there is a change in quantity, it will affect the cost of goods sold. It will affect the gross income. If there is the combination of the two, that is the costs and the quantity, it will have an impact on this. Then it will have an impact on this. Okay, hope is cleared. All right. So you can go through the video again to check. You can start all over for the analysis. Okay. Now, to carry out this analysis in details, there are two methods. So, method of our analysis, two methods. of analyzing changes in income methods. Number one, we can use the percentage method of analysis. We can also use the diagrammatic, the use of diagrammatic method. Okay, diagrammatic. Now let's start with the percentage method. Under this percentage method, 5 things are paramount here. You must know the sales, you must know the cost of goods sold, you must know the price, that's the selling price, that's the selling price. You must know the costs, what I call the cost price, and lastly, the volume, that's quantity, which is the volume. So we call these factors. Now, these three will be required of you to compute. And if you want to compute these three, one of them must be given, okay, in the question. The question will give you one of them as a parameter to calculate either this and this, given this, or given the price, you calculate this. So one of these three factors must be given, including this and this. Okay, one of these three must be given. All right. Okay, class. Now let's look at a question to do the analysis. Don't forget, to do this analysis, the statement, the income statement of a company will be given to you, showing the sales and the cost of goods sold only, because the excess of this over this gives the gross income. Don't forget. All right, so let's get started. All right, let's look at this practice question one. Practice question one. Consider the following facts. The sales, the cost of goods sold is given for 2015 and 2016. All right. Now, the volume, that is the quantity increase, is 15%. Don't forget, I told you, you are required to calculate percentage change in price, then percentage change in cost, then prepare a condensed statement of changes in gross income. A condensed statement of changes in gross income. Okay? All right. Now, to start with, you check the volume increase. So this is an increase. So percentage change in the volume is given. You check one of the factors, one of the three factors I showed you in the here. So which one is given in that question? The volume has been given. So you have to calculate the price and the cost. And don't forget, the price is normally calculated on the sales because it's a sibling of the sales. The selling price is a sibling to the sales. Okay. It's one of the, it has a relationship with the sales. So then the cost, when you are calculating the percentage cost factor, it relates to the cost of sales, cost of goods sold. Cost of goods sold. All right, class. So take note of that. But this has been given as 15% from that question. Now, how do we calculate the percentage change in price? You need a computation. So let's look at this. So we have computation of percentage change in price. Computation of percentage change in price. We know that given percentage change in quantity as 15% increase. We know this as 15% increase. Okay, so based on this, since we are looking for percentage change in price, we will concentrate on the sales. Then we need to adjust it back to 2015, what the sales would have been in 2015. This is the actual sales in 2015. So we need to adjust it back to what would have been in 2015. Okay, so doing that, we said the sales, or let me say the expected sales in 2015 would have been 100 divided by 115. So this 115 is the addition of this 15 plus 100, okay? That is 100 plus 15%, okay? Now, this is the percentage of the given figure, okay, which is this percentage of the given figure. So now multiply. Now the percentage of the figure you are looking for will be the numerator. Take note of that. Why the percentage of the given figure that you know is 1 will be the denominator. So you now multiply by 1771. So this is the expected sales in 2015. So you are trying to write back, you are trying to get the expected sales in 2015. And that will be, when you use your calculator, we have 154000. Okay. But the actual sales is 1.4. What is the actual sales in 2015? So somebody said, why are we using sales? Because we are calculating the percentage increase in price. So, and price is related to sales. Okay. That's why it means there is an increase. So, okay, but the actual sales is this. So compared to this, it means there is an increase. This is an increase in sales. And that increase is 140. So because of increase in quantity, it has affected our sales. So this is an increase in sales. So we now express this as a percentage. All right, we express this as a percentage. Okay, you now say hence percentage change in price will be 140,000 divided by 1,400. Sorry, 1,400 million. Then times 100 over 1. And this will give you 10%. 10% increase. 10% increase. Okay? 10% increase. All right. Then number 2, we have to calculate percentage change in cost. And cost, I told you, relates to cost of goods sold. Okay? Cost relates to cost of goods sold. All right. So this is 2016. So as at 2016, there is an increase in the volume of, which is 15%. Do you understand that? There's an increase in this. So we now bring it back. So let's look at this. So you write computation. All right. Percentage change, computation of percentage change in cost price. This is a symbol for change in cost price. So note that given percentage change in quantity or in volume as 15%. So we use the volume to interact between the price and the cost. Okay, that's an increase also. So if it is an increase, don't forget we have somebody asks, what of decrease? So we'll treat that in the next video. All right. So we have the expected cost of goods sold in 2015 is 100. Don't forget, all over 115 multiply. So what's the cost of goods sold in 2016? So we use it to calculate the expected cost of goods sold in 2015. So multiply by one 267,875 divided by 1. Okay. Now, when you multiply this, what do you have? So I'm having 1,102,500, but the actual uh, actual cost of goods sold in 2015. So what's the actual cost of goods sold in 2015? That is 1,050,000. So which is 1,050,000. All right. So if you look at this figure and this figure, there is also an increase. There is also an increase. So we now have increase in increase in cost of goods sold. So what is the increase in cost of goods sold? And the difference is 52,500. So this is what you expect, and this is what comes out. All right. Now you need to express this as a percentage. It will, because it's on cost of goods sold, it will now be hence percentage change in costs is nothing but 5,500 divided by this figure. That's 105 times 100 all over 1, and this will give us nothing but when you take your calculator, I think I'm having 5%. Okay, and that is 5% increase in cost. 5% increase in cost. All right, 5% increase. Then the last one says we should prepare a condensed statement of changes in gross income. So to do that, it will be in this format. The first column for sales, changes in sales. The next column, the changes in cost of goods sold. And the last column will be the increase or decrease. Okay? So let us start with the first factor. That is, we can start with the quantity factor. That is the quantity factor in sales. So the quantity factor in sales, that would be 15% increase multiplied by in sales 1,400,000 multiplied by 1,400,000. Okay, and that gives in sales. So you write it under the sales. So that's 210. Okay, and if